welcome back. So today's video will be sort of linked around the future of the US economy, and as to what I think, um, sort of the indicators that you should look at to sort of help you understand what's going on. And the beauty is right now is earnings season for banks in particular. And if you're somebody who doesn't trade equities or doesn't trade financials, it's still a good idea to see the report of the financial companies and use that into your investment thesis as to when you're trading. Because as I've mentioned in one of my previous videos, that the banking sector is a cyclical name, so i.e. it's a good way of seeing how well the economy is really doing by seeing the performance of the banking sector in that country. And so the idea is as I was mentioning with the European and UK banks, to sort of give you an idea of how bad the climate is. If you just look at Deutsche Bank was one of the, well, pretty much the bank to go to in Germany, and it's gone from well $27-40 to $7. And that makes sense because obviously Germany has had low interest rates, pretty much zero flat interest rates for a decade. So banks need a hiking rate environment to make money, and that's exactly what's happened here. So JP Morgan reports on Friday, and they gave better than expected results. So they posted a 5% surplus gain in profits and revenue, exceeding expectations. And the main reason was because of the fact that obviously the period that they were reporting is obviously was during when there were actual rate hikes going on by Jerome Powell, and obviously that benefits the banks because they make a net interest margin, a higher net interest margin. So how that works is obviously central banks set up an interest rate. So say for example they raise rates to 2%. Now in an interest rate raising environment, the spread at which they borrow from the bank and they lend to consumers, people like us, gets wider because they know it's an interest rate hiking environment. So where it's 2% and they say the market's pricing a 25 basis point rate hike, the banks say they normally charge a 1% spread, they will end up charging 1.5% spread on 2% at that point because they know that it's a rate hike environment. So they obviously anticipate earlier and they charge a bigger spread. It's called a haircut in the industry. So that's how they make their money. And obviously it was clearly reflected well in the share price. The share price for JP Morgan was up, I believe, about 4-5%. Sort of closed at around 4.5%, but went high as 5%. And for a banking name, that's fairly good and fairly large. And obviously, this JP Morgan is a company, or a bank that is has the most assets in the US. So it's definitely quite an attractive report. That being said, obviously, it doesn't mean that it's a good buy at the moment or anything like that. But I mean, the trajectory is going in. It looks like it could potentially hit new highs soon. Yeah, so the idea of looking at this is to give you an idea that, look, okay, the unemployment is low. There was a rate hiking environment which was good for banking sector. Good for banking sector means it's good for the economy, so that's sort of a tick in the boxes. But now that the idea comes about, what's the future? What does the future hold? Obviously Jerome Powell has said that he's probably not going to raise any rates this year, and that's what the market is pricing in, and even potentially pricing in a rate cut at the start of next year, about a 50% rate cut chance probability. Now if that happens, clearly that will affect the banking system in a negative way. So the idea is the economy going to or starting to slow down? Because obviously, just so you know, when they report, obviously they're reporting for say previous 12 months or previous quarter or whatever. So it's always a good idea to understand that, well, if the central bank is considering to maybe cut rates or even hold rates, then that could mean that they're expecting a slowdown in the economy, in which case it's something that you should be prepared for. And that's exactly what obviously I make sure I do. So it's a good idea to keep on track. There's still banks reporting earnings this week as well, so it would be a good idea if you keep following them. And and sort of get an idea and gist of exactly how the US market and the US economy is doing and how that can affect your portfolio. And I hope you guys enjoyed this video. Leave comment, like, subscribe, and also I'm going to start leaving my Cash App sort of username, tag, whatever, in the description. So if you want to help donate this channel, obviously I'm keeping content and everything free, but obviously it takes it takes my time out of my day to sort of record these videos. So it'd be nice if any of you are interested, that you do enjoy my videos, just go ahead and send a donation. Any donation is more than welcome. Just shows that you sort of appreciate the videos, and it helped me to keep carrying on, because they are, this does take a fair bit of my time and it's a bit taxing. So it would be nice if get some support from you guys. But anyway, yeah, thanks for watching my videos, and I'll see you guys in the next one. Bye.